Hello and welcome to today's morning report on Monday the 26th of September with me, Richard Perry, market analyst at Handtech Markets. We've got a real risk-off sentiment driving through the markets today. European markets started off negatively on the back of a negative close on Wall Street on Friday. We had the oil price that was down sharply on Friday. Let me just show the oil price, which was down sharply on Friday in front of this Algerian meeting between OPEC and non-OPEC members that is going to be taking place in the next few days. That sort of sentiment, that negative sentiment that we had on Friday, sort of filtered through the Asian markets and subsequently got even worse through the European early trading session. DAX, CAC, both around 1.5% lower, FTSE just over 1% lower. Really is quite negative. You've got Treasury yields which are falling back again, 2-year slightly lower, but the 10-year also dropping. These is general sort of risk-off attitude there, and what we're seeing is gold holding up relatively well, but the yen is the big outperformer in the forex markets. In terms of your dollar, it's sort of basically flat on the day, nothing too massive in terms of direction. That's broadly because we've got the stronger yen. We've also got a slightly stronger euro as well. That euro has picked up slightly on the back of the German IFO data, which came out this morning strongly, beat across all the metrics on the German IFO. So a positive data release there from that has helped to support the euro, but generally speaking we're pretty much risk off. You've got sterling that's weaker again. Brexit fears continue to sort of dog that one, and as I said, equity markets all lower today. So general sort of pretty negative way to start the week, really. In terms of what we're looking at for today, not a huge amount. We've got the new home sales for the US this afternoon, expected to sort of fall by almost 9%, back from 654,000 to 598,000, but that's that 654,000 last month was a really strong number, so not to be unexpected there. But certainly, I think that the general gist of the feeling on the market is pretty negative at the moment. So we've got the presidential election debates that start off today. You've got 3 debates in the next month, and that starts today. That could well have an impact, volatility for the markets. Will it be Trump? Will it be Clinton? Lots of sort of different factors playing through the markets that could happen on a Trump presidency. So depending on how that debate pans out today, with the runners neck and neck at the moment, will be very interesting in the coming weeks. But my chart today is the Kiwi dollar, and the Kiwi dollar has been trending higher, hasn't it? If you zoom out, this big uptrend channel actually in the past sort of year or so has been trending higher. There's been a sharper uptrend, but that sharper uptrend was broken on Friday, and now look at this. Could we be about to form a big head and shoulders top? That 72 big figure support is key now. That 72 big figure level has basically been the support through late August. Didn't quite get tested on the initial selling pressure through September, 72.30, but Friday we started to sort of put a lot of pressure on that September support, and it could be that 72 figure comes under pressure. You've got these momentum indicators. Look at these stochastics which are falling away again. That's negative. You've got the RSI also back below 50. That is seemingly sort of now sort of leading the market lower. So the RSI has already completed the pattern. So it looks like the pressure is coming on this 72 figure level, and if that sort of sees a closing breakdown, we could see further weakness. Theoretically, you'd sort of measure the target, I suppose. 74.85 down to 72 figure is around about 285 ticks of downside, so you'd be looking at sort of below 70 big figure, which to be honest you'd probably be in line for a test of the 69.50 support from July. So we could see a pretty significant retracement actually back towards the lows of this big uptrend channel once again, although the uptrend channel still remains intact over the long term. You'd say we could still see this rolling over this top pattern, sort of 2-3 month top pattern back towards 70 figure area. certainly not to be unexpected if that were to be seen. So could be that we're in for a bit of Kiwi correction as these indicators are all showing. Now, in terms of your market move today, we've had basically a consolidation today, nothing too significant. But certainly Friday's selling pressure, well, Thursday into Friday selling pressure, breaking below the old September lows, and the momentum indicators more correctively configured now, aren't they? And this looks to be just an unwinding move. So you'd look for selling into strength. So you'd say initial resistance, obviously today's high, which is round about a bit of an old support from mid-September anyway. So 72.50 up towards 72.80 is a pretty reasonable sort of sell zone, I think, now on the Kiwi. So I think it's sort of building up for a real sort of big sort of test of the 72 big figure level, and as I said, if that breaks, then you could be into more of a corrective phase. So I wish you good luck in your trading today, and I will speak to you later. Thank you.